thing you have to change is you want to change the wave color. These are this up here, and these bull and bear color signals. You can change those colors here, and that's the circles. All right. And then show trend on table. You can choose to have it there or not. We like to use it, and you can adjust your time frames to your preference of trading combinations. But I do like to include the show DXY. We do have it on a specific crossover to fit what we do. Let's see, and you can also adjust. We left it here for the color, so you can make it pretty or aesthetically pleasing for what you would like to have it. So okay, so here for the divergence, we do have an additional divergence option up here at the top, and so what I would like you to change is here the number. We'll increase this to, let me see, at least 5. We want 5 types of divergences showing before it pops up. You can do 4 if you want to be, kind of be safe, but 4 or 5 will work. But you just don't want it to pop up every single time they find some divergence on one of the things. And so, and you can, like I said, color code this as well. And just to kind of spend a little bit of time on this component right here. This is, do you guys remember when Manny went over the differences between hidden divergence versus regular divergence? And so, like I said, you can color code those to match the divergence down here. So once you make a decision on, which colors you want for your hidden divergence, you can match it for the ones down here. So, that's what we did, but I just kind of keep the solid and regular so I can kind of tell which one is which. I do like to keep it with that. Let's see. Okay, show rules. All right, so you can choose to show rules or not. And what this is a really cool indicator that I actually dropped a version of this in the chat that Sandra Woodard, she actually created for our team. Just gave her like an idea one day when we was on a session, and she just went ahead and made us a checklist. And we just went over a couple of weeks ago. Like having your checklist, your confirmation checklist, and it could be the entry checklist, your directional bias checklist. You can break it. You can make it whatever you like, but this will be included in on the chart or not. And so where it said show chart, show rules, that's what you can choose to show it or not. You don't have to have it on there if it's irritating you. The amount of spaces that you have, so you can have it closer or farther. And Sandra, just FYI, it does work. You don't have to make any adjustments. But you can have it closer or not. I'm so sorry for coughing. I'm just gonna, but you can see it'll move further out or further in, by that adjustment. You can change the font color or whatever, and you can change the label color if you like, if you want something a little bit different or whatever suits your preference, right? All right. Okay, so and then the last thing, it will be the POC line. So the fixed volume profile line, Sandra also automated this for us. I had actually sat down on Friday and I was like, man, I hate it's like one of the guys on from the other company. I used to hate having to put that thing up there every single time. So I figured out the calculation for how to adjust it between the different time frames. And so you wouldn't have to keep doing it. You would have to go into the fixed volume profile, but change the what do you call it, the bar number and something else, And anyway, I figured out that calculation, but Sandra was kind enough to create the automated version of that. And so she let us put the automated version in the SGT document, so you didn't have to have like a gazillion different indicators. Like it's already like a gazillion up in here. I promise there's a lot of them. Right, to the MACD. So if you've done this one, you don't need to make any changes on the regular MACD 4C. If you chose to do that one, and on this MACD, like I said, you can do a lot with it. This one is I think long story short, you can do show regular, hidden, and like I said, you can color code it. I won't do it this time, but I will share my settings, how I color coded the hidden versus the regular ones later for you guys if you guys want them. But just for the sake of time, I'm just gonna go over this right here. So this is unchecked. I didn't want all of this extra. There are several different types of MACDs that you can utilize, as you saw. But I removed, well, these aren't checked. And so you do want make sure you want the zero line showing. And let's see, there was one, it's under style. Yours might be checked. I think this is my default setting. Okay, yeah. So on this under style, you would, unless you want to change the colors, and I do have a version where I have all of my colors exactly matching, the same greens, maybe a different, lighter green, but I wanted it to all match. But you want to, I'm gonna show you why you might want to. These signal line crossovers, that was just a bit too much for me. Like where if you were using the regular MACD, there's like I think it's MACD squatters, something, whatever. There's another version, or that if you typed in moving average divergence convergence, it would, or however you say that, it would have these at the crossover. This is where that signal line crosses, and so actually just where a color change happen. I don't need those there. It kind of irritates me, but you might like it. But like I said, this is what I did. So I just unchecked those because it's already a busy little chart down indicator. So I just wanted it, as clean as possible. So that's what I left on there. So that's the only thing I changed on there. Any questions so far? Yeah, the DMI, if you don't like the settings on the DMI, you can change that, change the thickness of this line, the control bar, all those colors. You can color code it. Like I said, just color coordinate it to green for up and cell for red. And I don't really care which color you choose, but just kind of be consistent with the cells on color. Your bias the other color. Okay, does that make sense, guys? But this is all you have to do to your MACD 4C. All right, so you're going to take the MACD 4C and you're going to right click anywhere on your chart, or if you're down here at the bottom at this oscillator, you're going to right click here and a box should pop up like this. And you're going to add alert. All right. And sometimes it might have like the actual pair up here at the top, and all you have to do is click on the drop down. It might look like that. And all you gotta do is click on the drop down and click here. But very, 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 very important for you to do is to do zero line first. If you don't, you're not gonna get the right crossover. Yeah, so I know some people try to do it, but if they don't get that part right, your indicators are not, your alerts are not gonna come out right. They're just me. It's weird. I don't know why it does that. But the plot line first does not work. So then do crossing, then do MACD 4C, and then do plot. Okay. And then I typically like to do it just once per bar close. Only when it's consolidating is when in your low time frame is it kind of annoying. But other than that, I just do one here. You can keep your expiration open ended, and you can name your alert. So like with this one, I might say something like XAU or gold for hour. And if you want to put a message in there or change the message, you can do that as well. And then show. I know I had you guys to do in the 401, the Forex 101, how to do your alerts. But yeah, just all right. So now this is the how we actually do the strategy. Okay. So we have we still do what Manny showed us on finding the order block. And so typically I will do my order block on my clean chart just as out of habit. My clean chart being this one. And I would find order blocks here, and I'll just mark it up on the higher time frame, 4 hour, 1 hour, just whatever you normally do, or like trade ideas that the guys might give you guys, or whatever. All right, so the POC. And that line, the automated line, is just basically volume profile. And we just took all the extra stuff out. And it's just, if you're familiar with our previous company, it was a strategy. Like I said, I just calculated the numbers, and this is just the automated version. And so now all you need is the line. So the rule is if price is above, here we look for buys. If price is below, we look for sales. Okay. And then the next thing is you look for chokes. So where this would come in handy is when we've already marked up our order blocks on our larger time frames, and so that helps you to not get in at a reversal. This is a phenomenal continuation trending trade for trending trades, but it also, if you do it like in this order, the order block and the POC, this will this will help you kind of stay out of trouble whenever we're doing a reversal. Okay, so Krishan's trying to get in. Okay, so but yeah, so right here, but yeah, so you're gonna look for a choke. So like right here, you had a choke. This is a higher time frame, but you go down to your lower time frame, find your choke. Down, you're welcome. And yeah, it's just for just extra confirmation, but technically you don't kind of need it, but it's always good to keep the steps of the smart mnemonics. But yeah, the strategy kind of makes you lazy. I don't. It'll kind of make you lazy sometimes, but this is but you want to keep in order of want to keep these in order. So see where price is right now. Okay, so I'm going to show you let me right here, where before price, as price was about to flip over. Watch this. Watch where it should be. Let's see. All right. So it's not really, it hadn't flipped yet, right? But your POC line is still up here. And as I'm kind of get it a little bit slower so you can see the move, like once you get a choke, your POC typically will adjust. So you saw that. So now you got your choke and you got the normally the reason we added this is because the 400 we were missing out on but yes, how you find your word blocks. So yes, So you saw how the PLC line came from up here to now we're looking for buys, but if you were only depending on your 400 EMA, you'd still be only looking for sales. You kind of be like, is that a flip? Is it ready yet? You got your order bought, but you're trying to, you know, your EMA, your primary EMA or whatever, you're just trying to follow your rules or whatever. But this kind of added that extra, you know. So just wanted to kind of show you how that worked. So now we're looking for buys. And so we added a PLC to that. You got your choke. Well, you know, the lower choke. And now this has all happened, and you actually got an alert right about here. Okay, so now whenever your alerts will pop up every time the MACD changes from green to red. You'll get an alert, and that's what you're setting up. And so initially, when I first started this about 3 years ago or so, I was using EMA crossovers. They're so unreliable. You get a lot less noise even on the lower time frames. That's what I found whenever I used the MACD crossover. And so yeah, so you got the it's about to change over. So you still have, you know, the volume is going down, it's showing you volume, it's showing you momentum on the MACD. So I'm just gonna press. Okay, right here. You wouldn't enter here, but you're about to get a crossover. So that is where I would have been. I'm going to drop a vertical line where we would have gotten the where the crossover happened. Okay, so right here, now I've gotten the crossover, the alert popped up on my screen. So now I'm going to go look. And so now I see that the POC line is below. So I'm looking for buys. I was like, good. And it was at my order block from previous. So that's good. I see a choke. All right. And now next we're looking at the trend line break. Y'all always used to probably hear me rant about the trend line. I know the guys be picking on me. Okay, so you just start, you know, basic little trend line there, just to confirm. And so we, you know, it's a, you know, very elementary concept when it comes to trading trend line breaks, but they're pretty good. So we just added it as for extra confirmation. And when it's not that prominent, it definitely helps you to, you know, just as an extra. So these are just all extra confirmation. This happens like really, really quick. I'm going through this pretty slow, but just to kind of show you guys, hopefully you guys are not insulted by, you know, how slow I'm going with it. But I just want to make sure everybody understands every, you know, part of the, you know, the strategy. So, so the trend line break, yep, we got a trend line break, yay. And so now you also look for that circle. Well, mine is a circle. You can choose to change. Well, no, we can't make those changes anymore. But we kept them as circles, so it'll be a difference because we do have triangles too. So and you can change the color if it's blending in too much. Video, full color, bright yellow. I'm gonna take the opacity out. Okay. Yeah. Okay, so does that help? The yellow? Okay, so we dropped the vertical line right here at the crossover where the alert came out, and you'll get an alert when the bar finishes. And if you, there's an option, excuse me, you can have it when the bar actually opened, but I found that sometimes whenever it's approaching the line, and if you don't do it when the bar closes, it will give you a false signal because it actually, continues to the downside. So I like to, know that the bar has closed. It has, formulated a uptrend. All right. So that's the only reason I do it when bar closes on the alert side. Okay. But it's your preference if you want to preemptively or be able to go to the charts a little bit sooner. All right, so you have that, that confirmation. So then you also have this green triangle right here that says buy, okay? And so that's the, number 7. And then does everyone know how to use the DMI? Well, maybe not. I know that you're right, I know. So we have down here where the alligator mouth, so we have the alligator mouth. Let me see the brush. Okay, so when the price is above this blue line and my white control bar is above that, I know that one of the buyers or sellers are in control. I have it color coded, so it's green, so the green is above it as well. And it's around it's already been, it's already in action, but this is a higher time frame. So we have, it is, the buyers are in control. So the alligator mouth, that's the analogy that Manny taught us from his strategy. The checklist on the Smart Monix, the when we were in the other company. Let me see. Okay. All right, and then we have so the buyers are in control. So just to kind of go back over, we have the buyers in control. We got the MACD flip. That's what gave us the alert to go look. And everything's confirming because it's at our order block. It's at a reversal zone, possible reversal zone. And we got our choke. We have our trend line break very quick. And then we have the circle that confirmed that the bull signal, and we have this confirmation for the triangle. And then we have the ATR flip, and what the ATR flip is, hopefully you guys can see this, but where this red above this wave, it's a red little line kind of highlighted. Can y'all see that? It went from red to green. Red to green. Y'all see that?
Yeah, I can see that.
Awesome. A lot of people use ATRs or stop loss indicators, but we found a dual use for this. It served a really, really good purpose for entry confirmations, but also obviously for stop loss. If we entered in on that next candle that opened, we would, this is where I would put my stop loss. I know this is gold, just ignore that, don't be scared. But that could possibly be my take profit up here for structure. So, I got this going on, or, follow your rules. If you use a 1 to 2, 1 to 3, just, you can keep that consistent. What level is the blue line? It's at 30, and it's already in that chart. I don't want to say your name wrong, but let's see. It's under 30, and you can adjust that if you want. Hopefully that answers your questions. Let me know if it does, okay? And you can change the colors on it as well. Was answering a question in the chat, guys. Okay, so now we have the ATR flip, and it's serving as our, a trend, our trailing stop loss, as well as, but if you look through that, you're welcome. If you looked at that video from Thursday, I think Manny's rules are phenomenal. Those are really good tips and tricks for us as well. But if you just didn't want to think, you can do this too. But let's see, ATR flipped into the direction, so it went from red to green. So everything is lining up with the green. So the final couple of things is this has not lined up yet. The EMA has not conformed. And so you'd be like, well, all these other confirmations, you got everything else telling you to buy. And so, but that's the only thing on the checklist that isn't checking out. So you went from red waves, hopefully you guys can see the waves, to the green waves. All right, so you got your green, and it's a little bit red, but it's we have a green wave start. Okay, so that's the next one, confirmation. So the trend primary. Okay, so then the table. Lastly, the table. At this point, everything is pointing up. You know, it's super strong uptrend. The DXY, however do your analysis, but gold is going up, and so at least two. I like to do like an upper and a lower. So if I were actually trading, like maybe like the 5 minute, I might put a 1 minute chart. I mean, I would want to see the 1 minute and the 15 minute kind of like it's all in sync. But if you at least have two and the majority of them going up, that's a even stronger confirmation that this is gonna go up, right? And it's pretty reliable, but nothing's 100%, guys. Let's see, divergence. Here we go. And then the last thing, you have two components for your divergence. So we only added the one. Let's see, is this one? Oh yeah, and the note is that okay, so divergence for regular divergence. Okay, so this 4 is just telling us that well, look at the 7. Hold on. When you're looking at this, the chart, wait for it to load. Okay, so at that first I'm trying to get it as close to where we would have looked at the chart as possible. Okay, so right here, this is you got to remember that this is a 4-hour time frame. This is and it's gold, so this is a really strong. So you probably have a little bit of a pullback right here, this divergence, and this is like multiple different indicators and oscillators or oscillators that show divergence, and it's just saying 8 of them is saying, hey, you got some divergence coming up, and it's probably excuse me, the hidden divergence. But then you have this one down here that said it was going to be a buy. So you might be like, okay, well, let me just wait, see. So I'm just going to press play. But it's just to kind of get, kind of get you. Okay, so there you go. So this is my other, I didn't save it, sorry. I had to backtrack, my apologies. Change that to 5 again. All right. So anything above 5, it'll show me that, right? So that one was a tiny pullback, but for gold, that in a small account, that might have wiped you out. You know what I mean? So don't try to trade gold on a large account. I mean, small account on yeah. So right here, yeah, 78 pips, and you had a dip of the wrong lot size would have been very sad. But yeah, this is just to kind of give you a heads up. And so it is the hidden divergence one, but this one was saying that this was a reversal. So I had all of these other indicators saying, hey, we're gonna do a buy. So
excuse me, Bridget.
Yes, sir.
If the number was lower, like say the yellow sign was like a 2,
yeah.
Is that indicating that the trend up is not that strong, that it may continue to go down? Or like the red one was 8, if that was a lower number?
Technically 1 is enough, but it's just the confirmations for me. I just wanted a compilation of confirmations to take some of the guesswork out of it. But because if just say for instance, like typically we're only used to using the MACD or the RSI or stochastics for your divergence indicator. And so if you got something going up, it, you know, it'll show you like right here, this one for this MACD Royale, it's it's kind of like hidden divergence. Well, this one, yeah, this one's hidden divergence down here. And so right at this point, price came up and it did reverse, you see, and it might have just been this MACD that was showing it, but it you know, that's enough to show you that price is going up. And this one down here, this gray line, it showed you divergence at this point from here to here, and from here to here and here. It just, you know, it just kept showing you that, yeah, we're about to get a reversal. And so that one, you know, it's kind of just like, if, like I said, if you don't like all this extra, you don't have to, but I like to confirm divergence. I just kind of look at it as just extra confirmation to know if I'm at a reversal zone or if I'm at a continuation, I'm just at a pullback. That's just how I used it. I don't know if that answered your question.
Yes, I think, you know, for me, it's more understanding and just learning the divergence.
Oh yeah, actually we're gonna do some divergence trainings on divergence and Fibonacci stuff a little bit later for, you know, the 101 classes. I think something we had talked about just to kind of get you guys a little bit better with that.
Can I ask a quick question?
Okay.
So the number 8, just so I'm clear, is that saying that there's 8 type of oscillators are saying there's divergence, or is it saying that is it like a strength that number 1 is not very strong divergence and number 10 is strong divergence?
Nope, it's just the number of oscillators, and it'll change. I'll do the replay. Oops. And you'll see it change from 8 because it'll go back. We already saw the chart. We know it's just probably just a little pullback. So, but if I press play, watch that number. Oh, I guess I gave another one, sorry. Might have been a different one. But sometimes it'll change, that number will change. But it was a tiny little pullback, but yet and still it was actual pullback, if that makes sense.
Yeah. Okay.
Bridget, can I ask a question?
Absolutely.
So to clarify, the higher the number, the better the strength of divergence being present. Is that correct?
It's just more confirmations of different oscillators saying, yes, you have possible divergence here.
Okay, thanks.
Yep. So it's just like a stronger, like you got 5 or 6 of the different oscillators saying, yeah, divergence. And so like the posit here, where it went to 5. Sorry. And this is something I also look at. So if you had a pullback and this was like hidden, you know, it's probably like some hidden divergence or whatever. So you had this pullback and it pushed up, and you know, that you know, that was a pretty fire, you know, it was really good for you to be able to see that. I'm sorry, 1 second. Sorry, I got a cough. Okay, so but hopefully that didn't confuse you guys about that, but it's just hidden divergence, and just the higher the number, it just means more oscillators, more different types of stochastics. It's just including stochastics. Actually both of them do that. And if it's too confusing, what you can do, and you just want to look at one or the other, you can remove it off of the actual strategy. You can just say, you can just increase the number to 11. You rarely get an 11. It'll just disappear, okay? And you won't see any of the divergence there. Up there, if you just want to use your MACD or whatever that you like to use divergence on, you can do that as well. Does that make sense, guys? All right, so if we would have taken that trade just on a higher time frame with that drop, and you guys, hopefully you guys were able to see like how many confirmations we went through. I know it took a minute, but that's just to explain it. Trust me, it only takes like a minute, literally. After the longest thing might take is like to find your order blocks, like your normal stuff that you was gonna be doing anyway, or like the guys and stuff giving like their markups for the week. So you mark up your charts, you got your POC. But yeah, so here we go. So let me just show you, like that would have been, let me go to a normal pair. So that would have been a lot of pips. So does anyone, so I'm gonna show you real quick how quick it can be, okay? So let me go to a regular pair, GA. I don't really like GA, I'll be moving sometimes. It's got kind of wicky, I don't know, is that me? Excuse me. Sorry, I missed that cough. All right, so I'm gonna replay from back here. Oh yeah, all right. We're gonna pretend as though we had our order block already mapped out, and your order block was way up here. So we know this is probably like a continuation kind of situation. So we're looking for re-entries on a higher time frame. But this is basically how fast you can do this, like literally. It's like it doesn't take that long. So this is probably an order block from a higher time frame. We go to the higher time frame to confirm daily. Let's see. Yep. Got a little teeny tiny decisional zone right there. And you might have already gotten a really good entry, but then like you're already there, everybody else is already in profit, and you're like, man, y'all ever get those entries and you're like, they're 200 pips in profit. Or you might be waiting for it to come back up to fill in the inefficiency or whatever, the imbalance. But let me show you. So we're going to go through the rules really quick and pull them over so you can see. So you're already in this trade and you've gotten some pips, but you want to stack, all right? And this is just a stack. You can use, like I said, you can use it for confirmation for your order block entry as well. But if you just wanted to, this is for that. All right, so we look for the POC line. POC line is not ready yet. So, but I haven't gotten an alert for me to be able to enter. Oh, that's the daily tag. I'm sorry. Oh, geez. Okay, 1 second, guys. So I'm so sorry. I'm not trying to. We'll do this one. One hour. Okay, so we see that we're in a downtrend, and so just I don't know if I was clear about this part earlier, but whenever you see the MACD below the zero line, you are actually in a downtrend. It's the retest component, or it's a trend. Well, and whenever it's in a downtrend, you're actually, that's going with the trend. But so anything, once it comes back above the directional bias, because you've already gotten a choke that's probably coming off of the order block, and you we're waiting for this to come back up, but also we're looking for it to come back up. We don't want to trade against the trend. We want to trade with the trend, right? So we're going to look for this to come up and then come back down, and we're going to take it when it comes back down. So watch this. We've looked at the order block. We see the POC is kind of playing around price, but it is below it. So we're looking for sales as well. We're just looking for a re-entry opportunity. So MACD. So let's play. Okay, y'all see that? MACD came back up, right? So all we have to do is wait for our alert to wait for the MACD to give us an alert, another alert to come down. And you can also take, I think someone asked the question earlier about bringing it down to a lower time frame. So you could possibly do an alert for the 1 hour and the 15, but I'm gonna show you how to do that in just a second. But if you just want to trade on a single time frame, you can do that as well. So, but this is the single time frame. But so we see that it's started. So here we go. Now what you see, the darker green, when it turns darker, that's when we want to, that is when we know that it's getting ready to pull down. So this is where this is where you would have gotten an alert, where the arrow is down here at the MACD. I'm gonna draw my trend line break. Boom, that confirmed. See my circle, I'll see the circle. My sell circle, and my ATR flip. The only thing I didn't get was my triangle. It's best to do it when you get a triangle, but you can take them without the triangle. So I'm going to put my stop loss there because it's a higher time frame, but if I were on a 15, you actually can drop it down to the 15-minute and get a tighter stop loss. Also, it's really cool. So whether it being 47 pips, now that I dropped it down to the 15, I can get a tighter than the 20. I don't know if y'all can see that, but it still works. So we're just gonna say the price was there, right? We got our trend line break. We got our we had our sell, but we got to go back up to the 1 hour so we can see it. And then I'm gonna press play. Come on. Okay. So now we got the tighter stop loss. And you could have chosen, remember I told you you could have, this is a preemptive one if you choose to get in before that, but that's where you were to be planning to put it. But if you wanted to wait until after you got your triangle, which we have found that after the triangle, it's even better confirmation. So you got the triangle, you look down here, we're gonna look at this space. So this is a good alligator mouth right there. And here is also a good alligator mouth with the red in control, okay? So that was an entry, it was a short entry, but let me see how many pips that would have been, about 79 pips. Then it pulled back up, came back down, okay? So you could have had like 2 entries technically, but and I'm gonna show you how to get out of those. So that would have been one, this would have been one. Right, I wouldn't have gotten in until after that one, and you had another alert here. So it's 2. All right. Might have gotten knocked out of that one if you would have taken the tighter stop loss. But But like I said, you would have put your stop loss, your take profit here. So you would have gotten 85 and then possibly 79 pips, 2 trades. Did y'all see that?
So, but when you see the red triangle print,
Mhm.
actually you enter on the start of the next candle.
Yep. And
Okay.
just make sure your ATR, you got that one. That would have just been a short term. That's a preemptive one. This one without the triangle, because everything else didn't line up. But you had the everything was in line. It had the PLC at that time. Everything lined up basically. So it was you had your flip and your re-entry. You had price was even below your EMA. Yeah, just everything basically, was hitting for, everything was saying sell. Does anyone have any questions about how you confirm your entries? Red, you sell, green, you buy. So at any time I see a big triangle and the green, or it's yellow, but everything's green coming up here. If I backtrack it, I'm just going to show you how accurate it is. There's like green here. I don't know if you can see that. Green there, green above, it's above the green line. And if we were to do the PLC will be over here. You have to do the replay for the PLC to see the past, okay? But you got green flip. It was, it was red up here, but this is a re-entry from this one. This would have been a better entry right here. And you got a green here. You got your green waves, and that would have been about 438 pips. Okay, so
Bridget, I've got a question.
Sure.
Just looking at that chart right there, there's obviously some red arrows, obviously, alongside the green arrows as well. And I know, obviously, from looking at that chart at the moment, that is a trending buy. But how do you avoid entering in on the red triangle thinking it's selling? Because obviously, looking at the full chart, I can see, and this is obviously in hindsight as well, that that was a pullback and a re-entry. But sometimes when I'm looking at things, I get that wrong.
Okay.
How do I avoid that?
Okay, so like when you find your reversal zones, the order flow is super important. So that's one of the main reasons we do find the order block for the big reversal zones on the higher time frames. But the PLC kind of helps you with that. So if the PLC, see how I did the replay, the PLC kind of will help you with that. Anything above the green, above the PLC line, you buy. Anything whenever the price is below it, you sell. So let me move the candles over a little bit more so you can see. Let me see if it flips for you. See, we're looking, so it does help tremendously with the PLC line. I don't know, does that help? If you're using this for your entry strategy.
So that helps. So how many pips is that from that drop on the POC from the red arrow down?
Oh, from this one?
Yeah.
On the 1 hour one, let's make sure that everything lined up. Got this, yes, okay. So I'm gonna drop it here, but we wouldn't enter until we got that final confirmation where the arrow, the green, the ATR flipped from here to here. So this is where we would have entered, okay? So maybe right here, we'll just say right here, okay? And if you wanted to get a tighter stop loss, you can just put it right above the ATR, but that's kind of big. But so if you wanted to go to, let me see. I'm just gonna do it from the ATR right here. Well, I like even numbers too. So I would have did 30 pips plus my spread. Okay, so that's about, looking to the left, that's about 337 pips.